Hey, look up in the sky, it's a bird, it's a plane. No, it's me, the Unsigned on Wall Street, here with my man, Tim Anderson. Top 5 smartest people on Wall Street, ladies and gentlemen. And we are in an absolute, I think we're in this bizarre pocket, right? We are now post the dissemination of the news of the government reopening. The market didn't react correctly to the way it was during the time it was closed. I mean, it took the world kind of by storm, but the normal reaction in anticipation of it and during it, down 43 days, the longest in history. It didn't react right until the last couple of days. What actually came out of it was sort of a weird fracture and a illusion that, that all of this was pointing to the fact that AI was actually a bubble and that the data centers were BS and all. I mean, it just, you know what? It's actually a little more than my brain could handle. That's why I'm here with one of the smartest guys in town, Tim Anderson, to break this down. This is the big breakdown. Talk to me. So look, we had a shutdown, 43 days, longest in history, right? Yeah. Market didn't even engage it really on the negative side. Yeah. We had a couple of very shallow pullbacks, but it was never like, you know what, we're really concerned. We're not, even the fact that look, for the people whose lives it impacted, it was big. Right. And then, as far as we're concerned, it impacted our lives because we were not getting the economic data necessary for at least the Federal Reserve to do their due diligence as far as CPI, PPI, all that stuff, labor numbers, jobs numbers, and unemployment rates, to the point where, you had one day we got a CPI number, market responded poorly to that. Then we had the Challenger come out, which is just a service that, that actually tracks
private
this kind
jobs
of stuff.
number.
Private jobs number, which was showing 1 million layoffs, which caught the market by a bit of a storm. And that kind of, impacted the market on the downside. And then suddenly but it never really broke until the last couple of days. Tech on its own, it was a sort of a sector on its own that started getting eaten away, right? But not because of the shutdown. It was because it's sort of
a valuation correction a little bit, and some pretty vibrant rotation because the industrials acted great, evidenced by the Dow Jones Industrials trading above 48,000 and an all-time high yesterday. Now there's no follow through today. But
2 days in a row we had the Dow up, even though the market in fact was impacted on the downside.
Right. So
that was
some very powerful rotation.
Wow.
Internally within the market. Today we have a lot more broad-based, just selling kind of everywhere. Almost a sell on a news event with the Dow Jones Industrials down 1%.
Right, and
but 1% doesn't sound like a lot, but it's 400 and almost 500 points.
But let me interrupt you for a quick second, because the minute we heard, look, it was a weird of a sound. You didn't really get a sense that this was a very political move, the shutting of the thing down. The Dems blamed the Republicans the Dem. Everybody blamed Trump blamed everybody. Whatever. Right. But at the end of the day, it was surely impacting those government workers and people who were waiting for food stamps and all of that stuff in a powerful way. And we're a little bit detached from that. And so it did until it actually started to affect our lives. Did they actually make a deal? And I kind of think that's what it was about, because think about it. Everybody started talking about, oh my God, Thanksgiving's coming, the biggest travel day in the United States, and we already had a 10% cut on travel. People were waiting 6-7 hours at TSA. I mean, it was starting to impact the general public.
Yes.
And that's kind of, in an unpleasant way, because it just leaves a bad taste in your mouth that, suddenly it's going to impact me, and so now we should do it. But that was probably one of the catalysts to getting it done, because it had gone too far. The market didn't react to it in a normal way on the downside. And then we had the news that we came in after the weekend, and the news was that President Trump was going to end it. And the initial market reaction was obviously a super positive one. We were up 105 handles on that news, and that was good. It was a bit of a slingshot. It was like, okay. Now, the stocks that had been beaten up, even though the market didn't get beaten up, were the tech stocks. Right. Give me a little, but it wasn't almost that it was, you talked about some rotation and maybe some profit taking, because they've had an amazing move. I think it got all started by that Palantir announcement of spectacular earnings, and it was itself down 9% on great earnings report. Right. And that kind of took the market with me. And so I asked Dan. Dan's impression was that, look, it didn't signify the high of the stock. It was more like a run up into the earnings, sell it, buy the rumor, sell the news moment. It also was the fact that, look, when a stock is up 150% for the year and it has good earnings, there's nothing it can do to make it go higher. I mean, it's basically checked off everything. So it's already trading at a perfect valuation relative to where it is, and it's almost in a rational, enthusiastic place. So that when earnings come out that are solid, to go down 9% is normal. In the old days, that's what you did. It was buy the rumor, sell the news.
Right.
However, that gave the market, for some reason, and I guess mainstream media in a way, they went after it in a catastrophist way, where they started really questioning the value of tech in general, the AI trade, the NVIDIAs and the Palantirs of the world, the data centers and all that. It was almost like this sudden, like the thing that has been taking this market to the highs at highs, suddenly to negate the revolution that we're in AI and tech.
What are the limits of the CapEx spending? Are we at limit? Are we at max CapEx spending expectations with data centers and the whole AI build out to where valuations just can't go any higher? And I think that
that became the chatter.
Question
that was the
is,
noise.
yes, of course. And the question is, will these companies ever have their earnings grow into the higher PE evaluations that the market is pinning on them now? Because you're at some point in time, you're going to have those companies grow into those earnings.
Right, because look,
we've had situations like this in the past that were one-offs. Maybe Amazon was always overvalued. It was ridiculous. It traded at 100
not a whole
PE,
sector
and then it grew into its valuation. Okay,
correct.
so, but what's going on right now, and I think the weakness today, and with the weakness in tech, people are selling tech and putting some of that money into other sectors of the market. Today they're selling
which
tech.
Is fine though.
They're selling tech, but they're not putting that money into other sectors of the market.
Okay,
so those bids that were around yesterday and the day before just aren't there right now. So we're backing up a little bit with the industrial names. But I also think something that's going on is uncertainty. We have a lot of uncertainty about what about all the economic data that we didn't get for 6 weeks.
Now look, let me interrupt you because we were supposed to get that data today. And then the White House yesterday
we're not going to get all.
The White House said we're not giving you any of it.
Well,
now, are they gaslighting us? Are they gatekeeping? What are they doing?
First of all, it's not up to the White House.
Okay.
It's up to the.
But it was the White House that came out with that report.
It's up to the departments that it's either going to come from the Bureau of Labor Statistics or it's going to come from
why would they say we're not
different
give it out?
agencies, because they might not have it yet. Look, the employment data.
Then they didn't say that. If you said it, but think about it, markets are reactive. If you've had a government shutdown and we've had an absence of all that information, and now we're opening up the government and we know it's going to take a little while to go online, and the market is very skittish off of all of it, and we know that the Federal Reserve's decision making on the next cut, we know a lot of these big players are positioning themselves in interest rate sensitive portfolios, then you would say we don't have it yet, we'll give it to you when we have it. That's not what they said. We're not giving it to you. You will not be getting the October-November jobs number. That's how they said it.
Okay.
Now that felt to me like gatekeeping. It felt like they were just like, we're not giving it up.
Let's talk about how all these numbers, there's a different methodology. Depends on what number you're talking about.
Okay.
Let's talk about the employment report.
Okay.
The monthly employment report is initially when in October, under normal circumstances, the October employment report would come out on the first Friday of November. Okay. It obviously didn't because the government was shut down. Now, where they would get that number is that they would send surveys out to about 3,000 businesses. Okay. I don't know how many. Maybe it's 600 to 1,000. Okay, so no, but they don't have the pay stubs yet. They're sending surveys out, and they're getting responses. Now, part of the whole controversy of that procedure, it's a procedure from
archaic.
It's a procedure from 50 years ago.
Correct.
Okay.
We're in 2025 where AI is running the world. We got robots. We can't get these numbers.
In September, they sent the surveys out for the September employment report. The government was shut down in October, so we didn't get the October number, but they probably got responses from those surveys. In October, it's possible that those surveys, the government was shut down.
Okay.
It's possible those surveys were never sent out.
Okay.
I don't know exactly
But then you say that when you've got the people who are waiting to hear about that, and you want to either get them really upset or
They
calm
might
them
not have
down.
any data
But then,
from
then
October.
you say that. You say, look, ladies and gentlemen, we were shut down for 43 days. We are just getting online. It's not like you can flick a switch and suddenly we're all there and all the information's coming out. There's going to be a delay.
Look,
it's like, right?
This is the first day that the people that run these agencies are going to be back at their jobs.
Correct. And it just doesn't happen with a switch.
Now, the people that are giving you these off-the-cuff responses right now probably aren't really knowledgeable on all the minutia that's involved in collecting the data, tabulating the data, and put it in a reportable form.
Right. Okay.
So if anyone said you're going to get the data on Thursday, they never should have said that.
Okay.
There was no way in the world you're going to get data.
I get it,
on
but when
Thursday.
you've got so much anticipation, so much riding on it, and
my point is it just created a lot of uncertainty.
I agree with you.
Now,
I get that.
The other thing is that is also adding to the uncertainty is that there is a very deep chasm at the Federal Reserve among even the voting members on what to do at the December meeting, especially in an environment where we're not going to get publicly released data that they would normally have, and clearly they do their own research.
Right.
Okay, but there are probably we've had a couple of them speak because they're not in the quiet period right now. That meeting's not until probably the second week of December.
Right.
Okay. But there are probably 5 or 6 that are very strongly against a rate cut.
Really?
And there are
I
probably
thought there were like 3
there are probably
3
4
dissents.
You
think there are actually 5 or 6 that say no?
Here's the thing. There might be 5 or 6 of them that are against a rate cut, but they won't vote that way if they know that there's going to be a cut. Because they want to show as much unity as possible.
Right.
But you might have 3 dissents. You might have 4.
Right.
And if there's no cut, you might have 3 or 4 dissents also, because there are probably 4 or 5 a handful that are strongly in favor of a cut. So we don't know if there's going to be a cut.
Right.
And if there is a cut, there's going to be at least 3 dissents on either side.
Right.
And
so that's
look,
where this is building up the uncertainty.
The reality is none of this data is going to be earth-shaking.
Right.
We know that there are some issues in the job market.
Right.
We know that the government was shut down. We know a lot of this data is going to be potentially murky when it comes out until the hard data comes in. People will watch ADP. ADP has hard data. Think about what ADP does. They process payrolls.
Exactly. So that's the real number.
They're not relying on surveys.
That's why they're the ones. Look, at the end of the day, we get our numbers, then they are readjusted. They're readjusted. It's very disconcerting.
People that are managing money have been managing money for years and maybe decades. They don't like this.
No, but
so they're just saying, you know what? It's the middle of November. I've had a great year.
Exactly.
I don't really need to do anything right now.
Correct.
So
that's what's happening now.
I'm going
to take my profits and take my ball and leave the playground.
Right.
And that's the bottom line, because you know too that a lot of these funds shut down at the end of October, shut down at the end of November.
Some of them do, right? Clearly, not the mutual funds, not the
but some hedge funds,
but the big hedge funds, and they're big.
Look, you're up. The S&P's up 17%. They've had a great year. They've had a banner year, up 20 and change. We have nothing but uncertainty coming into the end of December since the moment.
Well, maybe until the Fed meeting.
From the moment that Jay Powell said in the last meeting that the December cut is no longer a surety.
Yes.
That was the word he used.
Yep.
That was when the market sold off radically on that word, because they had positioned themselves in very interest rate sensitive portfolios
and somehow,
coming into the end of the year.
Yesterday at one point there was a 65% probability
of
a cut.
Right.
This morning,
what was it?
50.
Really?
And I think it had to do with fairly strong comments from at least one Federal Reserve member, maybe a couple of them, that if they get an inflation report that's still in the 3% range, they don't think they should cut.
So we're talking, but if the jobs are weaker, but the inflation is higher, So is our fear then that we're going to go run, if we do cut, it's like a stagflation
It'll all
moment?
be about where they think there's more risk. Frankly, I think there's still more risk in the job market.
Right, as
You know,
opposed to-
because inflation, you know what? It's at 3%.
We talked about it. You
It's
said
not
to
to
me,
their
we're go-
goal of 2%.
No, but
that's
still,
that's
it's
an
down from 8
unrealistic
and
goal.
change.
I know.
Exactly.
What if it goes to 3.1, 3.2?
Right.
Is that going to be
the end of the
noticeable
world? No.
to
It
Joe
got down.
Retail?
You were the one
No.
who said that the mistake was that he did an amazing job getting it from 8.5 down to 2.5.
Yeah.
That number of 2 was an erroneous number that they
It's a
came up
made-up
with.
number.
Almost like we
They'll
threw
justify
that out
it.
there.
They'll
We threw that
justify
out
it
there
18
just,
ways to
just
Sunday,
to
but
know
it's a
that you're
made-up
never
number.
going to get there.
Right.
Right, you said to me that they should have acknowledged that they made it to
Spike
2.5.
the football,
spike
declare
the football,
victory.
and declare victory.
Right.
And that it's almost like a look. I think that his saying that December was not a surety was him poking the bear at the president.
Oh, absolutely. He hates Trump as
They
much
both-
as
look,
anyone in
They
Washington.
hate each other.
Right.
He's been under the gun from him for a while. He's never really acted out on it.
Right.
Because look, he hasn't.
You could tell that he was a little visceral during the Q&A.
And that
the last
really
meeting.
felt for me the first time where he was really
Yep,
poking that
yep,
bear,
yep,
and
yep.
but that sent the market into the state of uncertainty.
all
But
right.
I agree with you that the bottom line is there's a lot of uncertainties, a lot of unknown numbers,
Right.
and if I'm a big player in this game, and I want to call my customers and say, you know what, there's way too much uncertainty here between now and the end of the year. I'm shutting down my books, and we're going to
But
go
now
out
let's
with
talk
a
about-
20%. We were going out with a 20% P&L.
But let's talk about the positives.
Okay.
Although the tape is very, by the tape we mean what's going on in the market today.
Right. That's
okay,
that's
the
an
tape
old
is
Wall
not
Street
like it
term.
was
It's a great
25
thing.
years
Yeah,
ago. But the visuals and the optics right now are negative.
Right.
The setup is very positive.
Setup meaning?
The setup of the whole market and what we might be looking at for, well, let's face it, we're 6 weeks from the end of the year.
Correct.
Okay.
There's a lot that can
you know,
happen.
once we
could
get,
end,
once
look,
we get
could
to,
end up at Dow 50,000,
you know,
S&P
the
7,000.
last two, Christmas is on a Thursday.
Correct.
Okay, so we're going to have the last 2 weeks of the year is going to be Monday, Tuesday, Wednesday, very, very slow.
Right.
Christmas. The following week,
Same
Monday,
thing.
Tuesday, Wednesday,
Right,
very,
right,
very
yeah.
slow. New Year's Day.
Yeah.
But the setup in terms of, and the reason I say the setup is, and I want to pull this out so I get the data right. The
Historically, November.
bearishness,
Yeah, okay.
the investment advisors bullish bearish
Right,
thing
right.
has tilted very bearish.
Really? Oh, wow,
very
okay.
bearish
Wow.
over the last couple of
sessions, trading
sessions.
Right.
For instance, and if you can bear with me just for
Yeah.
a second, I know this is a little bit disconcerting, but the bull-bear spread in the American Association of Individual Investors weekly survey was down 17.5%.
From the
Was
last.
negative 17.5% versus plus
Right.
1.7% last week. Bulls fell to 31.6. Bears rose to 49.
That's huge. That's huge
So
because we
that-
have not had a bearish sentiment on this market since February, March, April.
And that's bullish
Yeah.
because it's a contraindicator.
Oh, really?
Sure, of course.
Explain.
Well, when you get bearish, it's like it's just because if there's too many people are bearish,
Right.
then they're not buying or they're not.
Well,
you know,
look, they are so
they've got
far
more
from
cash.
reality. Yeah,
They've got
yeah.
more cash. They're saving cash. They've got uninvested cash.
Right.
And they're waiting. And then when the market turns, they're going to be like, whoosh.
Oh,
They're going to be that much.
We also have, think about it,
$7
even every
trillion
sell-off we've had,
in cash.
Is still on the sideline.
Yes.
From underinvestment from February, March, April, from
Yes.
a lot of different points during
Yeah.
the year. That we've talked
From
about
higher
that
interest
before.
rates, from when rates were when you could get
Right.
5%
Yep,
in a
yep.
money market fund. Now maybe you can get 4%.
Right. So let's break this down. 2025 has had everything thrown at it. We did have that self-inflicted sell-off, economic Armageddon, February, March, April. We did have that incredible reversal. So we sold off 20.8%. In 11 weeks, we made the money back and rallied to even. In 4 weeks after the president said, buy the market, this game is over. We then had Liberation Day. We're up 17% net year over year. We then have a government shutdown. So I'm saying every possible thing that could be thrown at a market. A couple of global wars, the whole interest rate thing, the whole whole government shutdown thing, the whole tariff thing, going from whoa up there to down here. You know, we're never going to make deals. Now we're making deals hand over fist. And look, this market is extraordinary. The moving parts. This is a puzzle that was like a 100-piece puzzle on January, and now it is a 1,000-piece puzzle, right? With unknowns, with pieces that you can't even figure. The dog ate a couple of the pieces, so you don't even know where those are going to go. That's how kind of uncertain it is. And so that's why you end up with a day where the Dow is down huge, the S&P is down huge, even though it's a matter of what people focus on. It's almost like the market has ADHD, because if you think about it, where should they be focused? They should be focused on the fact that finally, after 44 days, the government is going to be back online. That's going to help travel. That's going to help government workers.
There was also a headline that it may take 2 weeks to get the whole airline system back to quote unquote normal.
Correct.
And I think I think a lot of people thought, oh, it'll be up normal by this weekend.
Exactly. Well, that's why they did it now, because Thanksgiving is 2 weeks away. Thanksgiving is the busiest travel day. That would have been an absolute disaster. Look, it would have been a financial disaster, a family disaster, a travel disaster in every possible way, affecting tons of stocks, tons of people, tons of everything. The whole economy. Right. Think about it. The last 6 weeks of the year, right? Things happen that impact the economy. These are not just lackluster days.
Shopping. They don't call it Black Friday for nothing.
Exactly.
Black Friday is the day. Is the reason that the Friday after Thanksgiving is called Black Friday is that historically Black Friday was always the day after Thanksgiving, when retailers
made their whole year,
and they went from. They became profitable.
They became profitable
after the sales on that one day. They became profitable for the year. It's a mind-blowing concept, but it's absolutely true, and that's why it's called Black Friday.
And also airlines, right? You have to realize the busiest travel day in the United States, probably around the world, and the Tuesday, Wednesday before are very busy also. But then you've got the Santa Claus rally. And then on top of that, you've got all the unknowns around the whole interest rates, the government shutdown, and what is the Fed going to do? And then what are we looking at in 2026? All right, my gut is that we're going to end up the year at 50,000 in the Dow and 7 in front of the S&P.
Probably,
That's my gut.
I think
there's going to.
I can't disagree with that.
They're going to mosh through all of this muck and mire here for a little bit, and then they're going to make a move to the top. And that's just how it feels, right? Look, if we had been in a downward trajectory, I think that we probably would have been more profit taking, tax harvesting, and a lot of uncertainty. And people were going, you know what? I've had enough of a good year. I'm taking my ball and leaving the playground. But we're not having that, because the upside potential is has more potential than the downside risk.
I think so.
You agree? Okay.
Sure.
So you know what? That's really all we have to say. It is wild and crazy. The market never disappoints, right?
Never a dull moment.
Never a dull moment. And up 1,000, down 1,000 is it's a mediocre move in this market, the way we've been trading for the last number of years. We've had intraday moves of multiple thousands of points and multiple percentages. And for a year that we had actually the last 5 months of not even a move as much as a 1% move on the upside or the downside, to now suddenly have these wild and volatile moves. Look, it's the lifeblood of a trader's market, and while earnings, more than 80% of them have beat, and we've had solid guidance. So you know what? Look, it looks like it's a beautiful day. One day does not make a market, 1 week does not make a market, but we're coming into the end of the year. The numbers are extraordinary. The Dow has gone through these thresholds of 46, 47, 48 faster than I can print a hat. The S&P is also going through that, as well as the NASDAQ. And there's nothing to say that just because people are taking some money off the table in tech does not mean that the whole story that we've been building out for the last 2 years is suddenly negated. It's all a bunch of BS. It's a bump in the road.
It's a down day in a couple of weeks where you've got a lot of rotation. And profit highlighted by downside in the high beta tech names.
Yeah, thank you. You know what? It's wild. It's crazy. It's wonderful. You are, the only guy I know who can break this shit down. And that's all I got to say about that. Einstein on Wall Street, Tim Anderson and me, we're out of here like Vladimir. See you later.